Listen to me. If you are sitting there approaching retirement, or you are already retired, and you think your credit score doesn't matter anymore because you aren't buying a new house or a fast car, you need to wake up. You are making a huge, potentially devastating financial mistake. Let me tell you why you need to care. Your credit score is no longer just about whether a bank will lend you money. It is the definitive report card of your financial responsibility, and in retirement, a bad report card can cost you a fortune. Do you want to downsize your home or move into a beautiful independent living community? They will run your credit. Do you want to switch your auto insurance or homeowner's insurance policy to save a few bucks on a fixed income? Your premium is tied directly to your credit score in most states. If your score has tanked because you simply stopped paying attention, you're going to pay hundreds, if not thousands, of dollars more every single year for the exact same insurance coverage. And heaven forbid you need a new cell phone plan or a medical device component that requires a credit check. The fear out there is real. The fear is that after working hard your entire life, doing everything right and saving every penny you could, an invisible algorithm managed by a company named Experian can suddenly lock you out of the best rates, the best services, and the best options for your golden years. You feel like you've lost control. You ask yourself, how can my score be dropping when I don't even owe anybody anything? Today, we are going to demystify exactly how Experian calculates that three-digit number, because you cannot protect yourself against a system you do not understand. First, you must understand that Experian doesn't just make up a number out of thin air. They take the data sitting in your credit file and run it through a mathematical formula, most commonly the FICO 8 model, which ranges from 300 to 850. There are 5 specific ingredients in this calculation, and I want you to memorize them because they are the key to your financial security. The absolute heaviest piece of the pie, accounting for a massive 35% of your total score, is your payment history. Experian looks at one thing above all else. Do you pay your bills on time? This is where retirees get tripped up. You go on a 3-month vacation, a bill gets sent to the wrong address, you miss a payment by more than 30 days, and boom, your pristine score plummets by 100 points overnight. The algorithm doesn't care that you have $1 million in a 401k. The algorithm only sees that you missed a payment. The second biggest factor is 30% of your score, and it is called amounts owed, or what we in the industry call your credit utilization ratio. This is the relationship between the balance you owe on your credit cards and your total credit limits. Now, listen to me closely. This is where the debt-free retirement mentality can backfire beautifully if you aren't careful. Let's say you have one credit card with a $5,000 limit. You use it to buy a nice new refrigerator for $2,500, intending to pay it off completely when the bill arrives. For that month, until that bill is paid and reported, you are using 50% of your available credit. Even if you pay it down to zero every single month, if Experian captures your score on the day your balance is high, your score takes a hit. The rule of thumb is to keep your utilization under 30%, but if you want a truly magnificent score, you keep it under 10%. Next up is 15% of your score, the length of your credit history. The algorithm likes old things. It likes to see that you have managed credit responsibly for decades. And this brings me to the absolute biggest mistake I see retirees make out of pure ignorance. You decide to clean house. You say, I am retired. I don't need these 5 old credit cards I've had since the 1990s anymore. So you call up the banks and you close those accounts. You think you are being neat and organized. In reality, you just cut your credit history in half and destroyed your average age of accounts. You closed down your oldest lines of credit and your score suffocated because of it. Never, ever close an old credit card account unless it is charging you an outrageous annual fee. Let it sit there. Put a small recurring charge on it like a streaming service, set it to autopay, and let that history work for you. The remaining 20% of your score is split evenly between 2 factors, 10% for new credit and 10% for your credit mix. New credit means how many times you are applying for loans or new cards. Every time a lender does a hard inquiry, your score takes a tiny dip for a year. If you are suddenly shopping around for 3 different credit cards at once, Experian's system flags you as desperate, and desperate means risky. Credit mix means having a variety of accounts, like a credit card, a car loan, or a mortgage. While you don't need to go out and get a loan just to improve your mix, it does explain why your score might dip slightly when you pay off your very last installment loan, like your mortgage. It sounds crazy, doesn't it? You do the ultimate responsible thing by paying off your home, and the system dings you because you have less variety in your credit active file. So, what is the actionable takeaway here? How do you command the system to work for you instead of against you in retirement? Number 1. Put every single one of your recurring credit cards on 100% automatic payment for at least the minimum balance. I don't care if you prefer writing checks. Automation guarantees that a stray bill or a period of illness will never result in a devastating 30-day late notice on your Experian report. Number 2. Stop closing your accounts. Keep your oldest cards open and active. Number 3. Keep your balances low throughout the month. If you have a major purchase to make on a credit card, pay it off immediately online rather than waiting for the monthly statement cycle. This keeps your utilization ratio low in the eyes of Experian's automated sweep. Your wealth is not just the money in your bank account, it is your ability to move through this world with financial freedom, peace of mind, and dignity. Do not let a lack of understanding about how Experian calculates your score chip away at the financial foundation you spent a lifetime building. Take control of your credit score today, stand in your financial power, and protect your hard-earned retirement.